General risk disclosure. Trading financial instruments, including forex, futures, equities, commodities, and cryptocurrencies, involves significant risk of loss. Trading is not suitable for all investors, as it may result in the loss of your entire investment. Leverage, volatility, and liquidity risks are inherent in these markets. Before engaging in trading, carefully consider your financial situation, experience level, and risk tolerance. You should only invest money you can afford to lose. Forex and futures disclaimer. Trading in the forex and futures markets is highly speculative and carries a substantial risk of loss. The leverage nature of these instruments amplifies gains and losses, potentially leading to substantial financial exposure. This content complies with CFTC Rule 4.41. CFTC Rule 4.41 disclaimer. Hypothetical or simulated performance results have certain inherent limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Equities and commodities disclaimer. Equity and commodity trading involves risks associated with market volatility, company-specific factors, and geopolitical events. While stocks and commodities may have a lower leverage factor compared to forex or futures, they can still result in substantial financial losses. Cryptocurrency disclaimer. Cryptocurrencies are speculative and highly volatile instruments. Trading cryptocurrencies involves additional risks, including regulatory uncertainties, security vulnerabilities, and lack of liquidity. Cryptocurrencies are not regulated by most governments or central banks, and their value may be affected by external factors such as news events and market sentiment. Regulatory references. In the United States, this content adheres to the regulatory standards of the Commodity Futures Trading Commission, National Futures Association, and Securities and Exchange Commission. In the European Union, trading practices comply with the European Securities and Markets Authority standards. Global compliance, content aligns with internationally accepted guidelines, but laws vary by jurisdiction. Consult with a licensed professional in your area. Past performance disclaimer. Past performance is not indicative of future results. Any historical results or performance shown in this content are for informational purposes only and do not guarantee future performance. Educational content disclaimer. The information provided in this video is for educational and informational purposes only. It is not intended as investment advice, nor should it be construed as a recommendation to buy, sell, or hold any financial instrument. Always consult with a licensed financial advisor or regulatory authority in your jurisdiction before engaging in trading activities.
Okay, knocking out this week 3, March 17th through the 21st. Let's get this sentiment. Sentiment. Okay, we're even lower on the bullish, 59.2% bearish. Bullish sentiment is even lower. Also, no cash on the side is even lower. Also note that bearishness went up. Basically telling me the market is unsure. But also, even though we have a majority bearish stance, I'm sure money is flowing into gold and maybe bonds. Okay, so basically to me, the market's unsure, but also even though we have a majority bearish stance, I'm sure money's flowing into gold and maybe bonds. Let's look at the COT CFTC. CBOE. Okay. Let's compare this. We got 177 and 158 versus last week was, let's go to week 2. $184, $144. $184, $144. Okay. So they're offloading longs. Okay. So we have a outflow of long positions and a inflow of short positions by the commercials. News this week. Forex Factory. I do want to see this just in case they switch to forecast previous. I've been trying to catch them do snake stuff. Monday retail sales. And Wednesday Fed fund rate. Unemployment Thursday. Since the heaviest high impact news is on Thursday. I mean, it's on Wednesday. That's when I think we can sweep the board and get the major direction for the week. Anticipating a Wednesday midweek reversal profile. CME Fed Watch. Okay, 98% this week. They're really no change on Wednesday. No change. Matter of fact, do this first. This is 98% chance of no change in the Fed fund rate on Wednesday. Let's go to the next one. %28 chance of ease, not very high for May 7th. May 7th is a 28% chance. .2% chance of a rate cut, which is very low. And the 8th of June, we're at 77%, or the 18th of June, 77.1%. of June, we had 77.1% chance of a rate cut. It was higher midweek, but as the week went along, it started to drop a little. Earnings, I don't think we got no significant earnings. Let me save this earnings. Usually all the good stuff is on the after close. Might cry, but none of these companies are weighted heavy enough. Are weighted heavy enough for it to impact NASDAQ. Let's go back here. CFTC. There we go. Where's the NASDAQ? I think I'm getting closer. You get lost in all this. Here we go. Let's move this down a little bit so I can see him at 163.209. 63/209 versus, let's look at last week. $156,195. 156,195. 156,195. Okay. So it's an outflow of shorts, outflow of short positions into long positions. Okay. That's interesting. Let's go to the dollar. Dixie Daily. Let's just look. Took this old daily low here. This previous quarter. Now we came up to here. Matter of fact, let's just remove this. This is just a basic dollar chart. Go here. This is that low. So swept that low. After liquidity, we look for imbalance. Liquidity taken and balance next. Let's make this brighter. Don't need this anymore, I'm pretty sure. I'm looking for dollar to retrace to the daily fair value gap. Then I'll be looking for it to go lower. Let's look at how we out of sync with seasonality. Pretty sure it's not dollar. Dixie. Yeah, March. We dip and then into March. So first quarter March is a drop. First half of March we drop. Then the last half of March we rally. First half of March we drop. Then the second half of March we rally. I'll look for that in a second. Let's go to Nasdaq. For 3% of previous month's range. Okay, we started off in this range. Wicked it. January, we broke previous monthly range high. Closed through it. February, we wigged that. Left old all-time high. March, we melted. Came back to this monthly order block, which is still a thing. Price has been feeling those inefficiencies. Price is rebalancing monthly inefficiencies. The monthly order block plus order block is looking like it's holding a bit. The month still looks heavy. go to the week. We broke in a previous quarter low. We still have this. Let me tag this price. We also broke and closed through this. This wick, I feel like it's going to be a thing. Yeah, but I want to see a little bit of all that. Major swing. This candle closed below 3 candles. Continuation, but a weaker continuation. We got 4 consecutive down weeks, with last week being the weakest. One thing I'm watching. Okay, we got 4 consecutive down weeks, with the last week being the weakest. One thing I'll be watching is this wick. I want to see if this wick holds price, and if a bullish fractal develops around this area. There is sell side liquidity at 18,914.50 and lots of untapped buy side liquidity. Daily. Okay, we closed that. Let me see if I can just move this whole thing. Oh, no. Maybe if I grab it right here. What about right here? What about? Okay, just delete that because I don't like that. So we didn't close below here. We're kind of trapped. Order flow is kind of trapped. This high, which is Monday's high, is interesting. Let me scoot this over just a little bit more. Okay, trapped order flow. Not closing below. A old Monday low and a daily fair value gap. Has no body closures. We have to sit on our hands. until order flow shows its hand. There's nothing to do there. Know how we're still in this range? These consolidation environments, know how we still in this range. Also, the range low hasn't been tapped. We're not showing willingness to go lower. Could be building a base for a turnaround. Let's go into H1. We wick this. We don't need this. This didn't hold. I mean, this kind of held. So I will be watching this line. It's a old rejection block. Breaking the close above that is a bullish sign. We're inside this daily fair value gap. And this is untapped. Kind of got to watch. There's a gap right here too. So we got us a flat top here on the daily. I don't have no preset for that. I don't need any more presets either. Coordinates. Okay. We can put that on the right. So we have liquidity here. It will make sense to grab this, even if we are going to go back down and take this range low, because when we took this low here, this is the last time sales side has been taken. You respected that. This candle should hold as order block. This is a gap. Order flow is still range bound. Returning back to EQ and chopping until the news makes sense. Um, Core retail sales Monday. No news Tuesday. Also note on Tuesday before Fed fund rate, we drop usually. I don't know why, but that happens. So be prepared for a big move before fund rate. Decision. Can't rush here. Just wait and scalp until order flow is clear. One-sided to find or to even look for swings. Look for swing trades. All right. Well, that's that on that. Y'all have a good day and peace.